Hi guys, this is Search. Okay, if you're watching this, you're definitely at the right place. Please don't forget to subscribe to our YouTube channel by clicking that subscribe button down there, and I promise you that will make your academic problems of accounting a thing of the past. With that out of the way, let's get into the lesson of the day. Now, in this evening's lesson, we're going to be focusing on fixed assets and internal control. If you want to do this question, it's an exemplar from Gauteng for 2022. When I was going through this paper, I realized that it's one of the best exam papers that you can ever find to prepare for examinations. And remember, fixed assets are going to dominate in your test. So I thought I should do this first online so that tomorrow after you are done writing, I'm able to also do it with you in class so that it can be easy for you to recall. So we are going to do it together. So here they're saying the following information relates to Ratiza traders for the year ended 28 February 2022. Partners are Oradile and Zama. Very important for us to know our financial period whenever we are dealing with our fixed assets. So here they're telling us that our year ends on 28 February 2022. So meaning that it started on the 1st of March 2021. Okay. And then the first part, they are saying that calculate the missing amounts in the fixed asset note denoted by letter A to letter G. So meaning that you need to be able to do those calculations on the fixed asset note. You need to be able to know how to get those calculations so that you can earn marks. So let's look at the first one that we are expected to calculate. So here the first one that we must calculate, they are saying that we need to calculate our carrying value, and then we know that the carrying value, for us to be able to calculate it, we take our cost price and we minus our accumulated depreciation, then it gives us our carrying value. So we're going to do that. Our cost price is 460,000, so it means we're going to say 460,000, and then we're going to say minus 396,750. So we'll say minus 396,750, and then it will give us our carrying value. So let's do that quickly so that we can save time. So to do that calculation, we are going to say 396,750, 396,750. Then we say 460,000 minus 396,750. It is giving us 63,250. So we'll have that 63,250 as our carrying value. Then after we move to the next question. Next question, they are saying that we need to calculate our carrying value at the end of the year for land and buildings. Now, what you need to check in terms of land and buildings is whether there was an addition or a disposal. So if you check here, when we started there, our cost price was 5 million and then the addition was 650,000. So obviously we did not buy anything. And remember, in our curriculum for land and buildings, we don't have accumulated depreciation. So it means you are just going to add your cost at the beginning plus the addition. So we're going to say 5 million plus 650,000, so which will give you 5,650,000. Okay, then you are done with that answer. Then the next one that we have to get is number C. So in terms of number C, they want us to be able to calculate our addition. So what you can do, you can simply start from I normally use bottom up when I have a question like this. So if you take 564,000 and then remember the fixed asset note, you start from the bottom, you take your 564,000, you check if there was any addition. They will tell you, remember we're looking for addition. So you firstly have to check also if, so what you want here is your addition. So you take your balance at the end, and then you add back your disposal, then you subtract your opening balance. That's bottom up approach. Or you can do a T account. So in terms of the T account, remember it will be like this. You'll have your vehicles, right? And then we have the balance at the beginning. Our balance at the beginning, according to here, is 576,000. So you'd have that 576,000 here, and then you'll have your disposal here, and then you'll also have your balance carried down here. So our balance carried down is 564,000. Okay, so it means we'll have to do it like this. So that 564,000 will come this side, and then you need to check if there's any asset that was disposed in terms of our vehicle. So if you go to our information, they said there's an asset that was sold. What we are interested in here is the cost price of that asset. The cost price of that asset is 132,000. So that 132,000, you are going to record it here. Disposal 132,000. So you see, it tells you that you're going to say 564,000 plus 132,000, you minus your balance at the beginning. So that's why I was talking about a bottom-up approach. So it means you're going to say, when you do that calculation, you will say 564,000, you add back your 132,000, and then you minus your balance at the beginning, which is 576,000. Okay, remember, bottom up will want you to do the opposite. So let's see how much we're going to get. So you're going to say 564,000 plus 132,000, and then you subtract 576,000, and then it gives you 120,000. So it means the addition is 120,000. So you are done with that part. Then we can go to our information about our depreciation. So in terms of our depreciation, remember, you need to have old, sold, new. Okay, so very important for us to know how to do this. So let's see how we are going to work this out. So let's start with the new one. Now you will be controlled by your information in terms of what they're saying to you. The new one here, they're saying that depreciation on vehicles is calculated at 10% per annum on diminishing balance method. So meaning that you're going to calculate on the carrying value. And then they are saying that a new vehicle was purchased on the 1st of December. So because our year ends in February, it means this new vehicle was with us for December, January, and February. So when you calculate for the new one, we are going to say 120,000 multiplied by 10 over 100, and then we multiply by 3 over 12, and then we see how much it's going to give us. So let's see, 120,000 multiplied by 10 divide by 100, and then multiply by 3 divide by 12, it gives us 3,000. So it means the depreciation of the new one is 3,000. And then for the old one, if there's any asset that was sold, you need to make sure that you subtract that particular asset. You take out the cost price of that sold asset, and then you also take out the accumulated depreciation. Then you calculate on the carrying value that they say you should calculate on. Okay, but this one is a bit tricky, so I suggest that when you do it, please make sure that you draw your fixed asset register. So I'm going to draw the fixed asset register for the one that was sold. Right now, if you look at our fixed asset register, we normally have our cost price. In this case, okay, let me do it like this. So in this case, you'd have your date, right? Your date, and then you'll have your cost price, and then you have your depreciation, and then you would have your accumulated depreciation, and then you would have your carrying value. Remember, I'm doing workings here, so I don't have to write everything in full because they are not going to mark this asset register. So I'm just helping myself. So I know that the cost price of the asset that we sold is 132,000. So according to the fixed asset register that they gave us here, the depreciation at the beginning is 13,200. Remember, the year that they bought it, it's on according to our information is 29 February, the year that ended 29 February 2020. So you'd have in terms of your date, sorry, the cost price here is going to be 132,000, and then your date is going to be 29 Feb 2020. So they said the depreciation for this particular year was 13,200. So obviously the accumulated will also be 13,200, right? Now let's check what's happening. So we got 13,200, and then the carrying value, it's 118,800. So you'd have 118,800. Then for the next year that ends 28 February 2021. Our depreciation, we are going to calculate it on the carrying value. So here our carrying value is 118,800. So you say 118,800. Remember, for this year, for the year ended February 2021, it was with us for the entire year. So you'd say 118,800 multiply by 10 divide by 100, and then you multiply by 8 over, by 12 over 12, which will give you depreciation of 11,808. So if you say 13,200 plus 11,880 is going to give you 25,008, and then from there you look for the carrying value. So 132,000 minus 25,000, 25,080, it gives us 106,920. So we have our carrying value as 106,920. And then now the present financial year that we are in, it ends on 28 February 2022, but this asset, they said it was sold on the 30th of September 2021. So we'll write the date when it was sold here. So we have 30 September 2021, right? And then remember, the carrying value is 106,920. So they said it was sold in September. So if you count the months, it will be March, April, May, June, July, August, September. So it's 1, 2, 3, 4, 5, 6, 7. Our accumulate carrying value is 106,920. So say 106,920 multiply by 10 over 100, and then multiply it by 7 over 12. Okay, so let's do it. So we'll take 106,920 multiply by 10 divided by 100, and then multiply by 7 divided by 12. It gave us 6,237. So that 6,237 will come here, and then if we take it and add it together with our accumulated depreciation for last year, it will give you your accumulated for this year. So say 6,237 plus 25,008 and 80, it gives us 31,317. Okay, and then let's get the carrying value. So the carrying value will be 132,000 minus 31,317, which gives you 100,683. Then with this fixed asset register, guys, you have answered a lot of things. You'll see why I'm saying that. Let's check. So remember the depreciation for the current year that we want. You can just choose to show them this part. Do the other thing on the side of your answer book. So we will just show them this part. So we are going to say 106,920 here for the sold one. 106,920, we say multiply by 10 over 100, and then we multiply it by 7 over 12, which gives us 6,237, right? Now remember how we did it here. And then after this, guys, for the old ones, you need to show them that you are going to subtract the accumulated depreciation. So for the old one, I'm going to study it a little bit here so that I can have space. So remember, for the old ones, the balance at the beginning for the old ones is for the old ones, the balance at the beginning is 576,000. So in this 576,000, we need to subtract 132,000 so that we can be left with the cost price of the old ones. So if you do it, you are going to say 576,000 minus 132,000. You are left with 444,000. And then in terms of, remember here we're talking about the cost price. Now in terms of the accumulated depreciation, you are going to take your balance at the beginning, which is 460,000. So you take 460,000, you minus the accumulated depreciation at the beginning of the asset that you are selling of this one, which is 25,008. Remember, is the year before the current, so you minus that 25,008. You'll see how much you're left with. So let's do it. 460,000 minus 25,080. It gives us 434,920. So after this, we get our carrying value. So our carrying value is going to be, we look for the difference between the two. 444,000 minus 434,920. 434,920. It gives us, I'm going to do this calculation. I don't know where should I move it so that I can have space. Okay, but let's get that carrying value first. So take 444,000 minus 434,920. It gives us 9,008. So you have 9,008. So this is our carrying value. So therefore our depreciation, it will be 9,080 multiplied by 10 over 100 and then multiply by 12 over 12, which will give us, let's see, so 9,080. Let's see, 9,080 multiplied by 10%. It gives us 908. 908. So this is our depreciation, this is our depreciation, and then this is our depreciation. So our total depreciation will therefore be 908 plus 3,000, and then also plus what is that other one, plus 6,237. Okay, so let's do it like that. So you say 908 plus 3,000 and then plus 6,237. Okay, let's see. Let's see. Okay. 6,237 plus 908 and then plus 3,000. It gives us 10,145, right? So you've calculated your total depreciation for the year, and then with this part we are done. And then this will have most of the marks for depreciation. It can have around 14 marks, so please be careful with that. And then so we are done with this part, and then we'll move on. So for number E, what do they want us to calculate? Number E, they want you to calculate disposals. So remember, disposals, it's your disposal at carrying value. So what you need to do, you take that 132,000 and then you minus the accumulated depreciation at the end of the time, when the accumulated depreciation when you sold it, which is 31,317. Remember, you would have done the fixed asset on your answer book. So you say minus 31,317 and then you give them the answer. So let's see. So you say 132,000 minus 31,317. It gives us 100,000 and 683. Okay, then we are done. Let's get the next one. Next one, it's number F. What do they want us to calculate in number F? They want us to calculate, okay, D. Let me see if D for depreciation, it was already calculated. Oh, D, we calculated it, and then also we also did C. So number F, they want us to calculate depreciation for equipment. So in terms of equipment, you need to check there's no addition, so only the old one. So and then they said depreciation on equipment is calculated at 15% per annum using a cost price method, right? So now what are you going to do when you do this? you are going to calculate depreciation on the cost price. So now if you say 460,000 multiply by 15 divide by 100 and then multiply by remember they said 15%, right? And then you multiply it by 12 over 12 because they were with us for the entire year. You multiply it by 12 over 12. It's going to give you, let's see. So if you say 460,000 multiply by 0.15, it's going to give you 69,000, right? Now, when you deal with old assets, you need to check if when you add it to your opening accumulated, you need to check if it will give you an amount that is greater than your cost price. So let's see, if you say that 69,000, you say plus 460,000, let me see here, what did I do? So when you do this one, remember our cost price, our accumulated, it's 396,750. So what do you need to do? You need to check if your accumulated will be greater or equals to the cost. It will be the same as the cost price or greater than the cost price. That's when you will know that you have residual value. So if you say 396,750 and then you add it together with 69,000, it gives you 465,750, and it's impossible because this is greater than your cost price. So it means you need to take your carrying value and subtract 1 rand. So if you remember, we got our carrying value, we calculated it, and that was the first calculation that we did. So you just take that 63,000, you therefore say 63,250, you minus 1 rand. Okay, so let's see. So this one will not work. So you say 63,250 minus 1 rand, which will give you let me see what was the amount that we got. So you say 63,250 minus 1 rand, so it's going to give you 63,249. So you get 63,249. Then you're done with that part. And then number G, which is the last part that you are supposed to do, number G, you are just going to take your accumulated depreciation at the beginning and you add it together with your depreciation for the year. So it means you are going to say 396 750, and then you add it together with your 63,249. Okay, so let's see, 396,750, and then you say plus 63,249, then it gives you 459,999. And then after this, you also need to prepare the asset. You need to also prepare the asset disposal account. So I'm only going to do this up until the asset disposal account. Okay, I'm going to do this up until the asset disposal account. So remember, when you do asset disposal, you need to do your recording. So here, because this is one of the questions that learners struggle with, so remember here we are going to have 30 September 2021, and then okay, it's actually supposed to be, so here it's supposed to be 2021 September the 30th, and then we have vehicles here. Remember, when you sell, you debit your asset disposal, you credit your vehicle, so it means asset disposal will be debited. General, and then we have 132,000 here, and then this side you are going to have 2021 September the 30th, and then you're going to have accumulated depreciation on vehicles. Okay, then there's general journal, and then your total accumulated at the date of sale, according to our information on the fixed asset register, it was 31,317. So you'd have your 31,317, and then after this you continue. Remember, you're going to have 2021 September the 30th. They said it was sold for cash, so you'd have your bank here, and then CRJ, you check how much it was sold for. Our information shows us that it was sold for 81,348. So it was sold for 81,348. Okay, and then the difference here, if you check, you add these two sides, they are not the same. Whatever, you need to check which side is the biggest, the first. So if we say 31,317 plus 81,348, 348, let me check here, 81348. So the bigger side is 32,000 when we balance this. So you close it off, you'd have 132,000 here, and then you also have 132,000 here. And then if you take that 132,000 and then you say minus 81348, then you also minus 31317, is going to give you 19,335, and this is what we call loss on sale of assets. So 2021 September the 30th, you'd have loss on sale of asset. And then remember guys, if we donate, would have written donations if it was taken for personal use, drawings, if it was traded in creditors control, and then yeah, so you need to remember those things. Okay, the different methods that you can dispose your asset by. And then so we are done with that. So here they're saying provide one suggestion that the internal auditor can use to check whether any movable assets have been stolen. So if I want to see if my movable assets have been stolen or not, we need to check the fixed asset register. That's the one that keeps records in terms of the movement of the assets in and outside the business. So the next one, they're saying Lennon buildings were bought 5 years ago for 5,000. Their property prices have increased by 20% since then. Partner Oratile suggested that the value of this asset should be recorded at a higher amount so that the additional 1 million can be reflected as a profit in the statement of comprehensive income. And then bar partner Zama disagrees. Give one reason why you would agree with Zama. Refer to gap principles in your answer. So number one, we need to tell them, remember you need to tell them why you agree. So here, why they said, give one reason why you agree with, why you agree with Zama. So number one, you tell them that you agree with Zama because you name the gap principles. Remember, historical cost. The principle is historical cost. It says that assets should be recorded at their original cost and not market value. Okay, so you've explained, you've named the principle, and you've also explained. Next question, they are saying that the partners suspect that some of the drivers are using their business vehicles for their private purposes. So they say provide 2 points to justify their concerns. Quote figures, hint, refer to information F. So let's check information F, what is happening. So when you look at information F, remember they said they are suspecting that these partners are using these vehicles for their personal use. So when you look at this, you can simply look at our fuel, petrol and oil cost. They have increased. So you can tell them that, number one, let's check how many 2 points. So you can tell them that petrol and oil costs have increased by, let's check the difference between the two. So it is the difference between 114 100, you subtract 65 200, they have increased by 48,900. They've increased by 48,900 from 65,000 65,200 to 114,100 to 114 100, then full stop. And then second point, you can look at another thing. So another thing that we are seeing here is that the repairs and maintenance costs have also increased from 32. We need to check the difference first. They have increased from 32,300 to 45,220. So let's see if 45,220 minus 32,300. Remember, they said you should code, so it means you need to use the information that was given to you. So we are going to say repairs and maintenance costs increased by 12,920 from 32,300 to 45,220, then full stop. So you'd have 4 marks each. Are we together? Then next, they are saying list 2 points of advice on how the partners can exercise better control over the use of the business vehicle. So how can they make sure that those vehicles are used very well? What are the actions that they can do? Number one, they can install trackers on vehicles, right? Number two, they can use log books, and then also I don't know how to put it. They can also use dash cams. Remember, in terms of dash cams, they will show you where the person is going. I saw car tracker is also one of those options, so you can just give them two, right? And then also the other thing, you can say that they could keep a register regarding the movement of vehicles, right? And then the other thing is that they should physically inspect the vehicles before and after trips, so that they can see who's wasting petrol and all that. So you can choose any of the points, but you need to make sure that when you give those points, they are in line with what they have asked you. And then next, they are saying that 6 of the drivers are dissatisfied with their salary increase and are planning a strike. Are they justified? Explain code figures to support your answer. So here's what we need to do to check. You can see that the sales have increased, right? And then their salaries have increased, but we need to check whether the increase is below or above inflation, Okay, so before you tell us whether they should strike or not, you need to compare their salary increase to inflation. So first, let's check the difference. 408 240 minus 388 800, it gives us 19,440. So then 19,440, you divide it by, remember it's the difference over previous, right? So you divide it by 388 800, then you multiply by 100. So let's see, 19,440 divide by 388 800, then you multiply by 100. So if you check number one, they could have a reason to strike. I mean, you can see that there's an increase in sales. So remember, when you say that they should, but you should also keep in mind that when you look at this, personally, I think, okay, fine, the sales have increased, but then also their salary increase is within the current inflation rate of 3 to 6%. So it's within that. So if I say no, I can say no based on the fact that their salary increase that they've received, it's within the inflation rate of 3 to 6% target. Okay. So for me now, I'm going to say no, they should not strike. You can also see that there are expenses with regards to vehicles. So when we answer here, we are going to say no. And then we say because their salary increase of, remember the difference that it has increased by, where did we do that calculation? So that salary increase of 19,440, 19,440 from, remember before it was from 388,800 to the present salary increases 408,240. 408,240 is within inflation rate target of 3 to 6%. Remember, their increase here is equivalent to 5%. Okay, so they should not strike. At least they got an increase. And then also remember that they are also using the business vehicles for personal use. So them also crying for increase, it will be foul play for the business. Okay, thank you so much, guys, for watching. If you want me to become your online tutor, please see that you know that our lessons are only available at a fee of 500 rand. You get 2 lessons in a week with 1 hour per session. So please make sure that you get in touch with us by calling us or texting us on 073 036 3208. Thank you so much for watching. May God richly bless you. Shalom.